Business nature of the company CJ Century, subsidiary of CJ Logistics Korea, core service integrate logistic freight forwarding, e-commerce delivery, focus on digitalization and supply chain integration, strong in last mile delivery and e-commerce fulfillment, expanding regionally to Singapore, Thailand, and others. Key client will be FMCG, electronic, pharma, e-commerce platform. Business nature of the company Tionan asset-heavy logistics company with on-fleet and warehouse. Service will be land transport, cold chains, warehouse, cross-border. Also involved in logistic property development. Over 100 logistics centers across Malaysia. Regional presence in Singapore, Thailand, Vietnam. Client will be electronics, pharma, FMCG, retail, and government.
Today I will present about the horizontal analysis Tiongnan Logistics Holding Berhad from 2022 to 2024 year. Firstly, current ratio it decreased because due to higher current liability and lower current assets. After that, quick ratio it decreased because liquid asset dropped while inventory and liability increased. Next, average correction period is decreased because customers are paying faster and improving cash flow. After that, debt ratio is increased because the company rely more on debt to finance assets. Next is time interest earned is increased because higher profit improve interest coverage. After that, account receivable turnover is increased because receivable will collect more quickly. Then the inventory turnover is increased because sale or inventory control improves stock movement. Next, total asset turnover is decreased because asset will use less efficiently to generate revenue. And also the fixed asset turnover is decreased because new asset were not fully product yet. After that, gross profit margin is decreased because rising cost and lower price reduce profitability. Then operating profit margin is increased because better cost control rise operating profit. Next, net profit margin is increased because improved cost efficiency boosted net income. And also the operating return on asset is increased because asset will use more effectively for profit. Lastly, return on equity increased because higher net income improves shareholder return.
Now, let us look at for horizontal analysis for CJ Century Logistics Holdings Berhad. Firstly, the equity ratio. For current ratio, it decreased steadily, and it is because higher short-term debts. For quick ratio, it rose then dropped. It is because lower cash and slower collection. For average collection days, it decreased. This is due to weaker credit control. Now, let us look at for leverage ratio. For debt ratio, it is decreased and stay at a stable leverage. It is because company keep at a leverage, it is stable and moderate. For times interest earned, it drops sharply. It is because it is a lower income or a higher interest. For account receivable turnover, it decreased steadily. It because poor relaxed credit control. For inventory turnover, it rose then decreased steadily. It because overstocking. For total asset turnover, it raised then dropped sharply. It because lower sales. For fixed asset turnover, it decreased steadily. It because poor return. For gross margin, it rose then dipped slightly. It's due to cost control. For operating profit margin, it declined sharply over time. It's due to rising costs. For net profit margin, it turned to negative due to higher costs. For operating return on assets, it dropped consistently due to a poor asset use. For return on equity, it due to inefficient capital use since it turned to negative.
Let's talk about vertical analysis 2022. Ratio of CJ Century portrays a better liquidity, showing that it is in a better position to raise money to meet short-term obligations. Tiongnan takes more days to collect its receivables, indicating slow collection and potential pressure on cash flow. In contrast, CJ Century demonstrates efficiency in its average collection period, ACP managing to collect receivables within just 49 days. CJ Century has a lower debt ratio of indicating less reliance on debt compared to Tiongnan. CJ Century's TIE is showing excellent ability to pay interest CJ Century low debts and high tide reflect stronger financial health and lower risk. As shown in the graph, asset management efficiency ratio for CJ Century is better than Tiongnan. CJ Century's superior operating and net margins reflect better cost efficiency than Tiongnan. CJ Century's higher OP, ROA, and ROE show more effective use of assets and equity than Tiongnan. And CJ Century also outperforms Tiongnan due to better cost control, more efficient asset use, and stronger returns on equity.
Vertical analysis for 2023 liquidity ratio. Reason for difference is because CJ Century has more cash or easier to collect monies, making it easier for them to pay short-term bills. For Tiongnan, release more on stock or may face a cash flow issue. So CJ Century is in a better position to handle in short-term need. Average collection periods. CJ Century is likely better at collecting payment quickly because of strict credit rules or good collection methods. Tiongnan take longer maybe due to easier credit term or trouble collecting money. This shows CJ Century manages receivable more efficiently. Leverage ratio. CJ Century uses least borrowing and focuses on staying financially stable by using its own money or investor form. Tiongnan borrow most, which could be risky if interest rate is raised, and this shows CJ Century is more stable in the long run. Asset management efficiency ratio. CJ Century is using good supply chains and strong sales. Tiongnan is lower number because they are not using their assets well. It's too much stock and old equipment and least efficient operations. Profitability ratio. Tiongnan makes more profit from sales, maybe could due to lower cost or higher price, but CJ Century manages its expenses and assets better, making good use of what it has. CJ Century's lower final profit could be due to paying more in taxes or interest.
Now let's look at vertical analysis 2024. First is liquidity ratio. Both current ratio and credit ratio of CJ Century are way better than Tionnan's ratio because CJ Century is more than 1 due to it has more current asset relative to its short-term liabilities. For average collection period, CJ Century can collect receivable within 52 days. That is better than Tiongnan because CJ Century converts receivable into cash faster. Now look at leverage ratio. CJ Century has a lower debt ratio and a higher times of interest earned because it provides greater financial stability and better ability to cover interest payment compared to Tiongnan. CJ Century's all asset management efficiency ratio is better than Tiongnan. For example, account receivable turnover, inventory turnover, total asset turnover, and fixed asset turnover is around 6.93 times, 17.99 times, 0.94 times, and 2.03 times because CJ Century collects receivable faster, turns over inventory more efficiency, and utilize both total and fixed asset more effectively to generate sale. Overall, Tiongnan achieves higher operating and net profit margins than CJ Century asset operating return on asset because Tiongnan demonstrating stronger cost control and CJ Century has a negative value of net profit margin, so its non-operating costs such as interest or taxes.
I'm Jacqueline and I'd like to talk about recommendation for Tiongnan and CJ Century from year 2022 and 2024. First, Tiongnan should working capital better maybe by having less short-term debt and higher cash or more effective collection on receivable. The second is still streamline its expenses and consider working in markets. And the third is decrease the level of debt gradually or refinance the current debt obligation to preserve financial balance. And the last is take into consideration the act of reviewing its asset base and increasing the productivity of its asset, perhaps by investing in technology that enhance asset efficiency. Recommendation for CJ Century: improve liquidity by controlling inventory and receivable, cut operation costs and diversity income streams, and CJ Century also should reduce reliance on high interest debt and sell unproductive assets, reinvest in profitable areas.
Sources of fund of expansion. CJ Century Logistics Holding Berhad recommended funding will be retail earning. Low debt ratio 0.4 in 2024 to 2024. Strong equity base, low financial pressure. High time interest earning will be 12.88 in 2022 in 7.25 in 2023, 4.18 in 2024. Solid interest coverage, healthy liquidity, current ratio will be 1.4 and quick ratio will be 1.2. Strong operation performance, net profit margin will be positive in 2022, 2023 and small loss in 2024. Return on equity will be 6.33% in 2022. Solid asset turnover. Benefit, maintain ownership control, avoid new debt, show financial prudence. Diona Logistics Holding Berhad recommending funding will be equity financing. High debt ratio rising from 0.62 in 2022 to 0.68 2024. Low time interest earning will be 0.68 to 1.12. Big interest coverage per liquidity current ratio will be 0.96 to 0.6. Quick ratio down to 0.42. Positive sign. Net profit margin improved to 7.61% in 2024. Return on equity rose to 6.02%, increased investor confidence. Benefits, avoid more debt, support long-term growth, align with improvement performance.